Welcome to Stephen Johnson's Stocks. The review, I remember saying at the start of the year, we'll recap every month of the year for the entire year. Little did I know I'd be recapping probably a 50K plus year, my first big trading year. So extremely excited about that. But like with anything, there's a lot of lessons, right? And a lot of lessons in life. I completed my first 3-day fast. This month it was at times brutal, but really good for discipline. And in terms of trading, since I've gone full time, I've been full time 2 months now, and I've been tracking data like hell. And I've been having trouble with analyzing the data. And I've went through some kind of wrong paths and turned myself upside down. Red month last month, 5K plus this month. But I mean, with the lessons that I've learned, which I'll share, I'll go through. This will be a good 30 to 40 minutes because I'm going to go through all of the journey of this month, because I really have been on some sort of almost transformational journey with this data tracking and with just learning and regaining discipline. It'd be taking less trades in quieter markets and more trades in busier markets, and just sticking to the rules that I've always known, like don't short gap and craps after 9:15. Try and avoid those clean charts with no history because they've got no indication of how they're going to trade with volume. And keep away from those sub pennies because they're dangerous. And with these rules, and I think the way I describe this month, and we'll go through the charts, but I've came to an end with the data where started heavily tracking, I mean years ago, but really heavily in the last 2 months. Went through some wrong avenues, and I feel like just coming to the end of this month, I started nailing it, and everything followed the data. So whether it be November or December, keeping in mind, I might not be 100% there, but I feel like I'm 90, 95, 96. I'm touch wood, record months. My best net month, I mean, this month net was 7, with fees it's 5, but my best net month is 15, followed by a 10. I believe I can equal the 15 or beat it based on what I know now. But let's go through the journey of how I got there, right? And that's the recap of this month. So the month started shaky, and first of all, let's just, I mean, we can see the data in the Excel. And basically what I'm going to do is go through the days with you guys and show you the breakdown on the charts and how I analyze it on stocks to trade. And luckily, when I take the trades, the broker that I have saves them onto their chart. So I can actually show you the breakdown on stocks to trade, but I've actually got the in and out points off the broker when I've made the trade. So I can actually show you precise entries and exits, which is brilliant for me and brilliant for you. But in terms of the year, I went full time in September and lost, which was very scary. But I'm doing good. Like January, February, March, April, May, June, July, August. We've closed 10 months now, and we're green 8. We've been red 2, and we're up 47,000. The red months have been $1,000 ish each. But the greens are like 4, 2, 8, 12, 3, 7, 5, 5. So we're probably averaging about 6, something like that. And in terms of the month, I need to work this out a bit more, but I think the winning percentage of days is really about 90%. It'll be more than 87 because that's 14 out of 16, but we've traded 20 now, so it'll be about 90, 91. Losing will be like 8, 9%. I just need to work on getting those losses down and those winners up. But I think compared to maybe like September, when the average net loss was 1.6, way too high. This was 1.1. The average net loss is the kind of the lowest it's ever been, and the green days is a really good run here. So it all kind of started obviously on October 1, and we started coming off the back of a very, very shaky September when I came home, tried to prove myself, settling in, just messing up. So bit shaky on October 1. I'd lost 8 grand in September and made it back minus the fees, right? So I only had to make the fees back, and then we're off and running. I felt like I had 2 months work to do because I'd fucked up the previous month, but I tried to have some composure and just prove that I could be a good trader. And it started with GSUM. This day in October 1st, and you can see that there's definitely resistance here on the 170s on 20 million. It's trading light volume today, only 16 million. So on October 1st, and we'll just be able to get it, we can see the kind of the gap up here. And the ideal way to play would be to know that it might have just broke through, but it's got a history of filling with volume. So we can take a starter somewhere in the 170s, and because it's filled with volume in the past, I really don't mind adding here, or shorting here, covering, adding, covering. And then really we've got the high of the day break, but because it's such a bad history, because the volume's not really there, I would have held to see really if I was really jittery coming off the back of the loss, I should have held through this high of day break just to see what it done. Does it hold out? Does it give it back? And as it happened, looking at the data log of the chart and how it performed capturing the trades, we can see that I traded it terribly. Shorting the lows and covering the highs, and shorting the lows and covering the highs here. So really traded it the wrong way around. I should not be shorting here, covering here, shorting here, covering here. I think we know that the ideal trade here is to be really looking for, I don't mind a short here. I don't mind the cover here, adding in here. And when this break doesn't break with conviction, we've got the short on the way down. Ultimately, 16 million volume is just not enough to be too worried about a squeeze on a stock that never really runs. So that was GSOM. We then had a pretty standard October 2. So GSOM was just red day, bad start. October 2 didn't really throw up anything too kind of monumental. And it was October 5th when I started feeling like things were starting to click. I'd managed to close the week out $270. It's not great, but it's only 2 days of trading on the month. And then I start October 5th on a 700 day, and I'm thinking, right, I found me feet. And it's a beautiful, beautiful trade because we've got this resistance, beautiful short, one of my favorite setups. Got this resistance here, and on October 5th, this day when we were short, we know that it's failed on huge volume. So it's likely that it's going to fail again. So for me, it's a case of getting short pre and having conviction. Or you can say that I've been trading and marking it out, but so it's difficult always to find the top. I'm not dead against having a starter here, 570, but it's got to be very light, a couple of maybe 100 shares. So if you do get squeezed 570 up to 650, you can cut it, or you can just hold 100 shares. I mean, look, it's just broke and it's trading what? Not too much volume. I don't mind this squeeze up. But again, like I don't mind going 10% down on 200 shares. Like I'm $100 down. I don't care. It's a case of just finding the top and writing it down. And again, I would have probably added here and then followed all the way down. I actually traded it better than I anticipated because I was able to just skip this triangle break, wait, be patient, hang on till the 830s, and then we're starting to get the entries where we've got these lower highs, and then when it doesn't have conviction to push through, we've got the ads, shorting the tops, and just covering all of the bottoms when it fails to break down, which is really the perfect way to trade it because we're thinking it's just made its move, it's holding its highs, we're forming a descending triangle, but if it breaks out of that descending triangle, you've got the push up. Let the push happen, look for the lower highs. Got the high, got the lower high. Perfect entry, which is hours short here on the first lower high. Adding, and the volume comes in, we see no real move. It's a sign that it's done. It's already failed pre. It's already failed. There's not enough volume to push it throughout the open. So we can take any of these shorts. Yeah, and cover any of these bottoms. We're seeing CRVS hold at the bottom, but ultimately it's just holding for a descending triangle, which is set to snap. So that was a really nice trade. And ultimately I thought, right, I'm on the way now. Things are going better. I'm running well. And I walk into the monster of PPSI. And now, if you remember correctly, we were all forecasting and discussing how we needed a big runner in October to make the markets up, wake the markets up. Thinking the market's quiet, there's not too much going on. We need a big stock to wake the markets up. And I think we had PPI earlier. I think we had PPI about 4 days before. And then PPSI followed. Sorry. Yeah. PPSI followed. This is October 6th. Just cross-reference. Yeah, October 6th. So on October 6th, PPSI kind of lit the market. I think PPI lit it first on October 4th or something like that. But we got, and it's just a ridiculous trade because you have no volume history. And all of a sudden, 300 mil vol out of nowhere, which is huge. Multi-month breakout, straight to 52-week highs. There is no business taking this as a short ever. It's just not a short. And there's been many like BRXF, UUU. They're the same pattern, but people got away with it more recently. But mega strong, held its lows, ripped all day. With this kind of chart history, I mean, you might be looking for the trend break short. The trend break short. You can short off the trend break, risk the trend break, 2.2% risk, right? And it works. You've got some downside here and you've got some downside here. I mean, this one is 9 to 5. You've got 80% downside on this trend break short. I was just thinking that I was doing well. Got ahead of myself, lost control, and took a stab, covered, took a stab. I basically fought it, and then fought it, and then fought it, and then took a 1.6K. I took a 2.7K loss on this. 2.7K lost. And I'm not going to sit here, but I made like 800 on some other stocks, but I'm not going to sit and tell you, cut your higher days, because I don't believe you should always cut higher day. Not going to say, when the stock breaks higher, that's the golden rule of shorting, right? When the stock breaks higher day, cut it. Not going to say cut higher day, because if you remember the first trade, if you scroll back, GSUM broke higher day, first of the month. I regret cutting it. But GSUM and PPSI are different trades. PPSI is record volume. GSUM wasn't. PPSI is breaking through the 52-week highs. GSUM's just a shit chart with a history of failing. So it's black and white, and there's gray areas of where you should cut your higher day breaks. And this clearly defines where you should cut the higher day breaks and where you shouldn't. Now, on PPSI, if you're stupid enough to short it, when it's trading $1 million a minute, it's a beautiful longness, beautiful. And then it follows the trend up. If you let it break, you buy the double, you've got bottom. It's broke. I remember analyzing this previously. You've got your first bottom, you've got your second bottom, double bottom. You've got your wedge break, and off you go. If you buy in the wedge break after the double bottom at 4, you've got 4 to 6, 30% on the way up. Very safe entry. And why not? 52-week highs, no chart history, massive volume, big squeezer. You've got nothing but air up here. Very, very easy long, terrible, reckless short. And it was at this point where I thought, well, how the hell am I going to recover from this? I'm red in September, and I'm borderline red again in October. put some standard shorts in, back to basics, following the rules. October 7, October 8, October 9. I'm just trying to survive, get the green weeks, build me confidence. Trying to build a port. Like I hadn't had a green week and red week in 3 months, so I'm trying to build me confidence of 1, 2, 3, 4, 5, 6. Trying to build the green weeks back up, right? Trying to build the confidence back. So I'm not showing you every trade because I just want to show you the key ones with key lessons and learnings. Not much happened yet. October 12th, discipline slips again. HUSN. Very silly again, because you've got this beautiful big red candle, history of failing, but what's wrong with this? It came from sub penny. It's since done a reverse split this because it was a sub penny. On this day, on the 12th of October, this it came from a sub penny, so it's done a reverse split since. So what I'll do with HUSN is I'll just show you the chart straight away. We'll not look at it on stocks to trade because it's reversed. It's updated the reverse split. This trade was actually, this screenshot was taken on the day of the trade. You can see it's the same day, October 12th. And it's just a lesson not to trade sub pennies because sub pennies don't apply to the rules of normal stocks. They're the worst of the worst companies, and they have the worst of the worst behaviors. Now, this was I've been green for the entire year. I'm up about 45,000, and I take the 8,000 in losses in September, first trading full time, and then in October I'm making money and I just give 400 back, yeah. And it's the same mistake I made in September. It was, I can't remember the name of the ticker now, but I traded a sub penny and lost about 5 grand on it. And then I lost again on HUSN on the same mistake. Just because of the worst of the worst, these squeezes are common. And I think hedge funds are, everyone knows that people short sub pennies because of the worst of the worst. So you've got these hedge funds pushing them up, squeezing shorts, and then selling into the squeeze. It's my theory. I shouldn't have been in it. If you're going to short a sub penny, do it at 1030. I only lost like 300-400 on the sub penny. The reason I lost 1,200 because I just broke down, snapped. Thought I'm going to try a higher price stock, shorted Apple. Was wrong. Added size. Was in like 80 grand. Within 2 minutes, I was down to 700. Panicked, covered. Thank God. But I threw $700 away in about 2 minutes through raw emotion and through losing control. And I just was losing my mind. I was so angry. And after that, I thought, Stephen, size down, get back to the basics. Go back to your old way of trading, how you used to trade. Because I was really trying to follow data, but I was following the data that I'd interpreted wrong. And after this loss, I thought, I'm going back to how I used to trade. And as soon as I went back to how I used to trade in the old style, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I'm on 14 green days in a row since I went back to the old style. That style that made us $15,000 net, 25,000 net in 2 months. And then as I went back to the old style, because data doesn't lie, right? The data is factual and truth. What has happened in history cannot be wrong. What I'd realized is that I'd been analyzing and interpreting volume, which is one component of the data and the strategy, wrong. And as soon as I clicked how data can manifest pre-market, first minute, through the daily, how it can really burst, but then when the pattern breaks down, it can die. Once that clicked, I started the magical fucking journey of the art and the science of trading, where I combined my art and intuition of 4 years of being a probable gambler, borderline gambling addict sometimes, but only making money. I've never lost. And then in roulette and trading and poker, I've never lost in any of them. Because I'm like an addict, but I'm very, very fucking careful. I'm an addict, but I'm a winner. Like deep down, I'm a winner. I win deep down. So the winner in me and the pride in me overcomes the addiction. But the art and the science of the art and the gambling and the winning side of me, the intuition, it all came through and it all clicked. But then I realized where it went wrong with the data and the science side that I'd spent hundreds, if not thousands of hours in, clicked. And I was just like, fuck. And I've become like this almost new hybrid trader of combining the bests of the arts and sciences. And it started going well. And I've got this whole new way of trading where I'm comfortable to size up next month. But we'll see. Got a bit passionate there and lost it. But things started to go better. And I'm not going to lie, we all need a little bit of luck sometimes to move forward. And in October 20th, I just had a bit of luck. Like, I was running terrible. I was in a bad frame of mind. And honestly, just some fucking luck from the trading gods came with ACOR. $900 day. I didn't deserve it, but I had it. Again, this stock had pushed sub penny again. This stock had pushed on 80 million and came all the way back down. So when we had the push on the 20th on this day here, I just thought this stock always fails. If you just hold on to it long enough, it's going to come down, right? Terrible way to think, but me psychology was just all over the place. And in reality, the best way to trade this, 2020 hindsight being what it is, you've got the trend break. I wouldn't be trading these sub pennies anyway, but you've got this beautiful trend break. And you've got this entry at 170. Watch it break down. But with sub pennies, they're extremely volatile. Nothing is saying that this can't go back to the 180s. With sub pennies, the rules don't apply to anything. Took a decent profit on the way down. It's up about 400 on the day, I remember very well. And I thought, don't short the open because I saw the 2 million. So don't short the opening candles because I saw the 2 million. In the first minute, I thought, dodgy, too much volume. They're already dodgy. With sub pennies, I'll play them, but if there's a single warning sign that I could squeeze, I'm out. 2 million is one of the warning signs. The fact that it's down too much of its highs is another. Took it anyway. 126. Added. Show you guys. If there's one thing I did right here, I didn't have too much size. So I missed this trend break short, which was the ideal entry. Here's your trend break, ideal entry. Don't mind the starter here. Don't mind averaging into the winner here. Now, I trade slightly different to this. I went through a long phase of trying to average into winners. What I'll generally do now is, based on the data, I'll have conviction that a stock should not, by the data, like say, and the volume and the chart history and the chart pattern and the dilution, every variable and the news and the sector, I have a set formula to say this never goes past 12% high day. This never goes past 20% high day. I'll take big size. The nearer it gets to that point, the bigger size I'll take. And if it does blow through that point, it's 1 in 10, 1 in 12, 1 in 15. That does, because it's the market after all, it's irrational. And I'll eat the loss. But I'll just short big size if it gets close to where it always fails. Whereas I used to be averaging winners, and it works, but often what will happen is you'll average into a winner. Maybe I'm not doing it well, but I'll get a big bounce and I'll get scared out and break even. I'd rather just take big size when I've got the best. It's instead of averaging into winners, it's better to play level. So it's next to a key level where it can fail. Take big size, gets to the level, cut it. Gets to a level it percentage-wise should fail at, take big size. If it becomes the anomaly, cut it. And then if you take big size, then cover the dips, add back in. So it's like you've got profit, but it's the same position. Or take big size, you cover because you get scared, but you leave half in, which might be 4,000. You've got 4,000 riding and you've already made your money with the trade. With ACOR, it was just like, Again, not a lot of size. I remember taking not more than like, I was up 400 bucks and took like half size here. So I was in probably a couple of thousand. And then I took very, very small ads here and here. And then when the top looked in, I hit it a bit harder. And then just basically getting out half here, reshort here, and then the rest out here. So it was light ads on the way up, heavy one at the top. And I think although I didn't play this well, although it breaks the rules with sub pennies, I still respect the fact that I didn't hit size and panic. I just thought the squeezes, they do squeeze, wait for the top to come in and smash it on the way back down. Smash the backside. Sounds rude, but it works very well. And then what kind of off to the races? We had that nice $900 day, right? And then that led me in to the 22nd. If I just check the 22nd, it should be MDGS. Hang on. Yeah, I've got the 22nd. So on the 22nd, all of a sudden, I started kind of hitting form, and we had the 800 day. We don't need to go too much into the trades, but we had like the main winners were Adel and KBSF. So the 300 and the 300. So if we have a look at ADIL, I really started kind of hitting form in the market. Now with Adel, we can see it here, 22nd of October. You've got this big push, it's failed. You get these kind of dead cat bounces. You've got the dead cat bounce here. It's just a case of waiting for the double top, taking it back down, showing it the push. Doesn't have enough volume really to run. What was the other one? KBSF. KBSF looks to be the first red day. Now I've been tracking and studying first red days quite a lot. And I really love the first red days where you'll get a ton of volume and a big gap down. So with KBSF, we're looking for that big push. And then ideally, I'm looking for the push at the opening to cover the dip. Sorry. I miss. To see the chart. Sorry. Sorry. With KBSF, it wasn't the first red day. I've mixed up the days. It was actually this green day, but it confused me. It squeezed at the end. That's why I'm confused. But KBSF, it's my favorite pattern. A few of these have reversed now, which I'm quite scared. But when you've got a high, it's not a perfect high volume failure because there's not enough volume on it. This ended up reversing, but whenever you've got an example of a stock gapping and failing before, it's very likely to gap and fail again. So when we saw this push pre, you can see that I'm just all over it. And the pre, catch the double top, cover the wash. Again, I'm panicking here. I regret shortening covering. There's more downside there. Now we kind of get into what I would call a more interesting territory and part. We get onto the record day of the month. And this was the 1.6 day on October 23. And I'd say this is when the strategy and the combination of the art and science really started coming together, really started clicking. And it was glorious, right? So this is why I was confusing KBSF, because we had the first red day. Bring this closer for you guys. But it really all started clicking with MDGS and SLDB and SEKT. SEKT is a different example, but I'm looking forward to showing you these charts. So with MDGS, we've got a huge gap up, failure. It came right back down on big volume. So it's not likely to do anything with less volume on this day here on October 23. There's too many people trapped here. They're all desperate to get out here. See the push, it immediately comes down. I did a really good job here of waiting for the push, letting it fail, hitting the backside heavy, covering at the bottoms, nearly took it all for $900. SLDB, same day, same story. Failed on heavy volume. We get this gap. There's not enough volume really to take it anywhere. Pops up, pre-market just fails straight away. Just got to get in there. It's not really about it's not about getting the perfect entry. It's about having conviction with the overall daily setup. Sorry, I just need to remember the day of this. Is it October 23? I closed it by mistake. Yeah. SLDB, beautiful shorts, adding in, taking size, covering the wash. Conviction, good entries, well executed plan. SLDB should have been 1,000, but I got the 900 and MDGS. In socket was a really, really interesting play this month. All the setups are very similar, and on the YouTube Trade Zero recaps, I talk about them. But you've got the 167 million day. Yeah, this is a beautiful reshort I missed on this day on the 28th. The thing with socket is it's almost like two lampposts opposite each other. It's almost like a UFC cage. That's how I almost say this. I've got patents on that, by the way. Again, heavy volume failure does nothing. You should expect that when this level fails, it all falls apart. But on the 23rd, we actually had a bit more volume than anticipated. We had a very choppy reaction. So I was initially short early, thinking the bag holders from this day would just bury the stock. For whatever reason, we got a bit more of a squeeze, triangle break, very nice long, kind of a Dan Irish pattern. Doesn't trade pre-market though. I don't know if he hates us when I say this because I'm giving him recognition, but there might be more nuances to his strategy where like I'm telling people his pattern's this when it's not. So I'm sorry if I'm wrong. You have to speak to him. But I was short. Basically, what happened was when I lost, I was too heavy in this. I lost about 500 on the break on the way up. Bit sloppy cutting it. And then the ideal is to just wait for the open, get a good entry, and you shorten the tops covering the bottoms. But we'll see what went well, what didn't go so well, and we'll try and kind of zoom in on this one because there's a lot of entries here. So the triangle break that I was just showing you guys, this triangle break here, this is the same thing here. So short, nice entry, covered a bit, added. I actually cut the triangle break at 8 a.m. perfectly. Where I went wrong is I shorted the first bull flag and took a stupid like $300 loss because I was taking it with too much size. And look, this was a good short, which I have conviction in. Volume changes everything. So this was set to fail with these bag holders dropping the stock. This like it was light volume here. All of a sudden, a million volume came in at 8 o'clock, and then it was heavy volume ever since. This is what changed the stock. I didn't react fast enough to the change in volume. And in the end, I ended up fighting it a little bit. But what I'm happy with is like I took 100 shares, 360. Halved it before the open. Let's have a tiny position because I felt like even though a lot of volumes coming in, it still failed on high volume before. So I had a small position added some decent size. When it failed, covered, reshorted, covered, and I had a good half size here, thinking it was done. The volume was more heavy than I anticipated. Added into the push, covered the absolute dead top, which was devastating. But when I'd realized it was a double top, took a chance, re-added back in. Because you've got to think, like, at this point, right? Just to put it into perspective, I'm up 1,000 on MDGS. I'm up 500 on SLDB. I'm up 1,500, right? I've lost 900 on the way up, yeah, but I'm still up 800 on the day, something like that. So when I get this good entry and I have these covers, I'm up about 1.5. When I get squeezed and cover the top, I'm basically up like 700 again. Like, I'll give everything and more that I've made on socket back from this initial short and more. And I thought, I'm still up 700 on the day, something like that. Added back in heavy, thinking if it squeezes again, it's a flat day. Fuck it. As it happens, breaks down. This was very good. Adding into the weak bounce. Took a lot more here. So, I mean, in the initial short, when we got this death candle, this was me back up to like 1314. As basically back up to, I was basically red 900, then made it all back on this short in the cover, then lost it all again, then got back to flat again on the ticker, but up 1.4 on the day, then reshorted it and made the 500. So this 500 is the short into the bounce. And that's where, again, I mean, I'm not going to say it's luck because I only made 400 on socket. I might not have played it very well, but I still had the 1.4 from MDGS and SLDB. They were brilliant, brilliant trades based on intuition and data. Socket was a bit lucky, but I messed it up. But then me intuition with trading kind of saved us. You'd think, well, why isn't it a 2K day? It's because commissions fucking destroyed me. It should have been a 2K day, I think, because if you look at the profit here, it's 5, 115, 18, 19. It's about a 19 day, but there's $200 of commissions there. And then obviously after a little bit of luck on the 20th, and then some good trading on the 22nd, and some very, very good trading on the 23rd, we're kind of hitting to the home straight where everything started to click with the data and the science, and we've come like full circle into this hybrid trading that I've been doing. And this is where I started feeling comfortable sizing up, knowing that I'm a good trader and I know the good setups. And this is when it clicked. And this is the most important thing. And I'll just explain this to you guys and I'll talk you through the camera on it. The key lesson for me was that, like, PPSI, why am I full size? And I remember saying this to my dad. It was like a eureka moment. I mean, mom, excuse the hair. Why am I only full size, full position on the most dangerous, most risky, most high volume, most volatile stocks? Why am I shorting full account or whatever I'm shorting, heavy size on the most riskiest plays with the worst winning percentage and the highest losing percentage? And then looking at it the opposite way, why do I take the safest setups with the least volatility and the highest percentage winning rate with the smaller size? And when I realized this, and the best fucking learnings are the simplest, when I realized this, I just thought, fuck. And that's when I thought, if I'm willing to be stuck a sub penny, 8 grand down, 40 grand short, whatever it is, why the fuck wouldn't I put 10 grand, 15 grand into a sure thing short? And then we had APOP. With APOP, I'll just move this StreamYard so I can make sure it's all recording fine. It's got a history failing here and here and here on high volume. I don't have the tickers for APOP because I went out and bought a car the next day. So I'm sorry. It was a 900 win. It's nothing special. I made 890. It's not something monumental. But with APOP, it's failed a number of times on high volume. So when it gapped up, yeah, and there's other runners on the day, I'm just like, ugh, this is coming down for sure. Already started failing. It's just short like 8K, just short of like 8, 9K. Because I was like, there's fucking no way. I've got a shitload of data on all of these variables. No way. It's 1 in 12, 1 in 13. Buying a car for like $1,600. Bought me car for $1,600 just to get around before I travel for 4 months. And I thought, well, why don't I just make the money or make a lot of the money for that car now? Why don't I just pay for that car with this trade? That's what I thought. And I didn't have the bottle to take more, but I should have. I regret it. So I took 8 grand short, 12%, shorting in the twos, covering in the 180s, made $900, went out and bought the car. So I paid for more than half the car. Popped back up actually. Sorry, this was about 700. Popped back up, shorted the bottom on the way back down and covered. And that's it. But honestly, I mean, look, it's a 5 grand month. It's not brilliant, but the potential now is that I can size up. That in the learnings here are that there's many. It's that through thousands of hours of data collection and analysis, and through a lot of rigorous practice. And when you change, like people say, don't change a system that works, and it's true, don't change a system that works. But you should always be moving forward as well, because if you're not moving forward, or if you're standing still, you're going backwards. So in September, I changed the system, studied data, analyzed, interpreted to get me trading to the next level. And I've just started feeling comfortable implementing the new strategy. And now I'm so almost ingrained in that one with the strategy that I feel like I can size up with it. The second huge learning is if I'm going to take big size. Because if you look at Alex Self, I had a chat with Alex Self the other day, and he was saying, Stephen, you're a better trader than me. I've just been sizing up way more. And I'm like, well, nah, because you've made much more money. So numerically and statistically, you're better. But I understand what he's saying. There's things through experience that I've got. And I just think if I can learn one big thing from him, it's that I need to take that size up now. Because me winning rate on these, I mean, in terms of days, it's about 91% this month. And it will be even more. But the key is to take the size on the short trades and take the less size on the risky trades. I mean, it's so simple. And other than that, look, it's a long recap. We're going on 45 minutes. There's nothing that I'm going to try and sell or push. This is all just honest learning, education, and work. If you've made it to the end, comment Jeeves, Geevs. I'd love to see, because basically the people who I see on every live stream and the people that I see watching every video and learning, I'll help for free, or I'll give, like, if I have time, I'll like give them data for like super cheap prices and stuff like that. And I'm not giving data away for free because I've spent thousands of hours painstakingly collecting it. So, but from the bottom of my heart, I want to thank you all so much for watching me from the live the dream days, from the we will not fail days, from the shouting off me balcony days, from me answering 30 to 40 to 50 negative comments saying you're never going to make it, your account's going to dry up and you're going to be getting a job. Well, fuck them. Trading full-time, trading for a living, made it. But I take that with a pinch of salt because I don't class myself as a good trader. I'm quite good at GABAs. I'm okay at first red days. I'm absolutely terrible long. Got to make strenuous improvements in higher caps. Got to make strenuous improvements in the parabolic dailies where you catch the first red days. I saw Jack and Kyle made like 18K on that. NWBO or something. JKS was similar. And while I'm good enough and I have the conviction to size up, there's no reason to not hit a 20K month. Doesn't mean I'm a good trader. It just means I'm pretty good at one setup. But over the next 4 or 5 years, being full-time helps immensely. My trading strategy will continue to adapt and evolve, and anyone who wants to watch, I'll bring you along, and I hope you've learned a ton in this video. I've deliberately been, where in the old videos, the content would be fun and the learnings would be few. I'd like to think now that these days, the content lacks jokes, but it makes up for in many, many learnings. So peace, live the dream, comment below, and thank you everyone who's followed before. I hope to continue bringing you along with me, and nothing makes me happier when you tag me in the wins on Twitter, Junk87. So please continue to do so. Thank you.